Hey guys, Joel Frank here, market analyst for YouTrading, and this morning we're going to take a quick look at the Aussie dollar. Because we had the RBA last night, so let's have a quick look at the post-RBA reaction. So I've got the chart here, one-day candlesticks, and you can see big red candles, so pretty much it's been a negative reaction to the RBA. And to compound the negative reaction to the RBA, we've also seen a steep decline in iron ore prices in Chinese markets. And you've got to remember that iron ore is one of the key Australian exports to China. China's been hungry for all these raw materials to build their cities and to develop economically. And iron ore imports from Australia have been a key source of that economic growth. So when those prices decline, obviously that's not good for Australia, who wants the prices to be, well, I mean, as high as reasonably possible. So anyway, that's another thing. But back to the RBA. As expected, they held interest rates at 0.1%. As expected, they maintained their weekly pace of QE purchases at 4 billion Aussie dollars per week in US government bonds. They also ditched their yield curve control policy, which has failed now anyway. Like you saw the yields, they were supposed to be targeting the yield on the April 2024 government bond at 0.1%, but markets had just pushed that way higher than 0.1% anyway. So it was a failed policy, so they just ditched it. But the dovish part of the meeting came in RBA Governor Lowe's pushback against the money market pricing. So money markets globally, across most of these global central banks, have been bringing forward their bets as to when interest rates are going to be hiked. The same with the RBA. Money markets currently pricing, I think, 3 rate hikes next year. Well, Governor Lowe was pretty much, he basically said that he doesn't see any circumstance where the RBA is going to be hiking interest rates in 2022. And he was quite critical of that money market pricing. But the RBA did open the door to potential rate hikes in 2023, which is still, compared to their previous stance, it's more hawkish. But compared to what the markets were wanting, it's not as hawkish. So that is potentially one of the reasons why the Aussie has sort of sold off overnight, as you can see with this big red candlestick. So we've dropped from, so as you can see, the Australian dollar, US dollar has been caught between a range recently, 0.7450 to the downside, roughly 0.7550 to the upside. So this 100 pip range. Well, we've dropped from sort of the upper part of that range and the 200-day moving average, which is marked up here in blue. And now we're testing the lower part of that range and the 50-day moving average, which is here in orange. If we break below this level, I mean, we've got a little bit of support here at 0.7440, 10 pips lower. But yeah, if we break below this area here, which I've put the square around, well, then that does probably open the door to a bit of a further extension of the selling towards this low here from the 18th of October, and a move below 0.74, basically. So yeah, things looking potentially technically bearish for the Aussie if it breaks below these key levels. And we've had a couple of technicians also pointing out the fact that the Aussie, these last couple of weeks, has pretty much failed to get above its 200-day moving average, which could also be a bit of a bearish signal. But you never know, maybe the dip buyers come in, maybe iron ore prices recover, maybe markets decide that the RBA was actually hawkish, and maybe you actually end up seeing a bit of a recovery. We're going to have to see. Trade what you see would be my suggestion. But yeah, guys, hope you enjoyed the video, and I'll see you all in the next one.